Hi, this is the PowerPoint video for Chapter 1. Hopefully it'll go pretty fast. I won't be getting into details, just overviews, descriptions, things you might want to hit a little harder in the books, things you may want to study for the upcoming homeworks and quizzes. Of course, Chapter 1's, again, just a general overview, so it's not a very typical chapter. There's not going to be any problems to work, anything like that. So this will be the only video for the chapter. So for Chapter 1, our objectives are to talk about cost management versus financial accounting, talk about all the current factors affecting management, and talk about what management accountants do. All right, so first of all, we all had Accounting 2301. We know that financial accounting is what we use to prepare the financial statements, so we need a system that keeps track of financial accounting, all the financial transactions, your sales, your expenses, your assets, your liabilities, all that good stuff. Follows US GAAP, provides the outputs like financial statements. Cost accounting, which is provided through the cost management information system, is about tracking information managers need to run the company, to make decisions. So like you would assume, based on cost, the name, it provides the costs for things. So you're tracking not necessarily GAAP compliant expenses. You're gonna get into some allocations and some interesting ways of tracking costs that may not be GAAP compliant, or may be GAAP compliant, because a lot of these costs do end up in the financial statement in the form of inventory and cost of goods sold. So it's not like cost accounting and financial accounting aren't related, right? Because costs are used in determining inventory or expenses, things like that. So sometimes they do. So costs of products and other objects for planning, for control, for making decisions. So in cost accounting and a cost management information system, it's all about what's logical and reasonable for managers. What information do they want to run the company and to make decisions about the company. So you have these two different systems, the cost accounting system and operational control. So in cost management, you kind of have a couple of things going on. You have straight up cost accounting, which is going to be used to assign costs to products and services. It's eventually going to become part of the financial accounting because, you know, direct labor and direct materials are going to go on and become part of work in process, which is going to become part of our finished goods inventory, which eventually gets sold and becomes cost of goods sold, right? So there's this cost accounting information stuff. It's going to conform to some SEC and US GAAP rules. And there's also operational control information system. So if you think about any organization, there are going to be controls in place to ensure we meet our objectives, right? So I've put some controls in place in the class. I've put some deadlines to complete quizzes, homeworks, and things, right? So I have set up some deadlines, and if you miss the deadline, the system's going to know and notify me, so I can provide you some feedback, or it's providing me feedback about you. So that didn't really have anything ultimately to do with anything other than it's helping me improve teaching the class, right? And I have this goal of everybody doing well. So that's what I mean by operational control. There may be some goals that have really nothing to do with the financial statements, but maybe they're more about improving the quality of the product. Maybe it's more about creating a certain number of sales, you know, things that managers want to know, but that really don't enter into the financial information. So operational control information. So there's kind of two things going on in a management accounting system. So a lot of factors. A lot of these factors we talk about are important to keep in the back of your head. Certainly, I think if you sit for the CPA exam, knowledge of these is going to come up in the BEC section of the exam. So understand global competition, growth of service industry. These affect how we do cost accounting. right? Because we're going to global competition means, I may have to do some cost accounting that comes up with transfer pricing when I create part of a product or service in one country and complete it in another. You know, in South Texas, it's easy for us to think about the maquiladoras and how some things get brought over from Mexico and we finish them here, or vice versa. And that is going to require some cost accounting. Service industry. Used to be when you learned cost accounting, you kind of learn about how manufacturing companies allocated overhead, direct labor, direct materials, and you made something. Boom. Most stuff is service. What you and I are going to do as accountants in the future, that's the service, right? So, of course, you have to cost that too. It's not like you can just like pull a number out of the air and say, this is what I'm going to charge you. No, you have to be able to do some cost accounting for that. Information technology makes our jobs easier, and it makes our jobs a little more complex. So everything's being tracked, right, through these enterprise resource planning systems, but also that means we have tons more data, right? So it's great. We have e-commerce, we trade back and forth, barcodes, RFID chips, everything is pretty automatic. Things you used to have to do manually, it's all taken care of, which is great, but it certainly makes a lot more data. So keep that in mind. Another factor, a lot of advances are occurring in manufacturing. So there are going to be many different ways of considering things like what activities are being used to create these costs. And different organizations approach running their organization differently. Some managers at some companies operate under theory of constraint. Some do just-in-time manufacturing. Some do lean manufacturing. Some do completely computer integrated manufacturing. So there's a lot to consider when you're thinking about cost accounting systems and setting them up. You know, what kind of, are they running lean? What are they doing? Certainly there's much more customer orientation to manufacturing and, of course, service related industries. The value chain is before they might not consider the entire value chain. Now, this factor affects cost management, the entire set of activities that go from designing, developing, and delivering, all considered now, rather than just we're going to build this trinket and sell it. You know, there's a lot that goes into. New product development is different from what it used to be. So you'll need to understand that we're going to have target costs. There's going to be some activity-based management that goes along with assessing those activity-based costs. TQM, continuous performance, continuous improvement. Why is this important to us as cost accountants? Well, we're collecting all the data that the managers want to see if we are continuously improving. Costs are part of that, right? We'd want costs to go down, we'd want quality and quality to increase, production time decrease. You know, so all this information we gather as cost accountants is all being used as part of this total quality management, if that we work at an organization that does that. Time is a competitive element. I mean, none of us wants to wait more than a day to get something from Amazon, right? Efficiency, crucial. What do management accountants do? Understanding what people out in your organization do is important. In the book, as we start thinking about direct costs and indirect costs, it'll be important to understand who does what function. So you'll be able to determine, is that direct labor? Is that part of overhead? So you need to understand line versus staff. So a line position is somebody that has direct responsibility for the basic objectives. So I used to work at banks. So the direct objectives is to pay and receive money, open new accounts, make loans. So tellers, new accounts reps, and loan officers would be what you would call a line position. At a factory, yeah, that person down there, painting the car, putting the bolts in the body of the car, you know, those are line. It's like there's actual line somewhere. We had a teller line, right? So line positions. Staff positions support and are indirectly responsible for the objective. So I worked as a teller, I worked as a new accounts person, I worked as a loan officer. I did all those functions when I was on the line, but also I did internal audit. Also I did training. So those would be staff positions. Training people is supporting the line people. Auditing, that's supporting the objective. So staff positions would be overhead. Controller, just like it sounds, is responsible for controlling the financial information, right? So they supervise the accounting department, right? They're responsible for establishing the controls that get the reports back. Typically the controller is the person who creates the financial statements, or their department does. So they're in charge of accounting. The treasurer sounds like an accounting function, but really it's a finance function. The treasurer is the person who doesn't really track the cash. That's accounting, right? The accountants are going to balance the cash GL to the bank statement. The treasurer takes that cash and invests it or uses it or decides how it's going to be used. They raise cash. They go to the bank and get the loan. So that's a treasurer. Does the treasurer need to understand where the cash is, where it's coming from, the cash flow? Oh, absolutely. But I would not list a treasurer as specifically an accounting function. Management accountants really are providing the information for planning, right? So planning's the future, what we're going to do in the future. They're responsible for controlling, which basically, in the context of this book, controlling is understanding what's happening out there as we're trying to achieve our objectives, getting feedback about how well we're achieving the objectives, and then figuring out what to do if we need to change anything. And continuous improvement and decision making. So accountants are gathering the information that tells us things. You can imagine if we're trying to continuously improve, we need to know things like, well, how much was scrap, or how many hours were spent paying people who weren't actually working, right? So things like that help us continuously improve. How much of our product was returned? How many refunds did we have to give because people didn't like the service? So continuous improvement, decision making, we're going to have choices. As we manage a company, we need plenty of information to help us make those choices. And that's what we do as accountants. So now I think if you still have any questions after watching this video, reading the chapter, it's time to email me or send me a text so we can clear things up. But if you feel ready, go ahead and try that homework, try the quiz, and then move on to chapter 2 if you feel comfortable. All right, take care.